Hello and welcome to Trade of the Week. With me is Nati Guma, and joining me for the next 20 minutes for a technical analysis on the Rand, Italtile and Afrimat is the co-head of trading at Unum Capital, Rob Pietropaolo. Thank you so much for your time, Rob. It's quite an interesting time because I feel like, during this period more than any other, I guess, in the recent while, there's kind of like this battle between safe haven assets and riskier assets. And actually quite interesting because we're going to be starting off with the dollar rand. Your safe haven dollar versus your riskier rand, the rattlesnake. And there's actually quite a lot that is happening. I feel like there's lots of things that are supportive of riskier assets, but also some things that are supportive of investors going into a safe haven asset like the US dollar. What do you make of the environment right now and how it's impacting exchange?
Look, I doubt that the dollar is very much a safe haven anymore. I think investors now are looking for yield.
Okay.
And they've got to take a little bit of risk. And now that we're in this supposed interest rate cutting cycle, I think the risk should shift to more emerging markets and emerging currencies. So I think that's where we're pretty much at the moment. And we can see, I mean, our market has been on an absolute tear over the last few weeks. And I think it's probably time to look at the rand, and it'll tell us what to expect looking ahead going into Christmas. And hopefully we get another interest rate cut too.
All right. Well, let us in to your lens.
Okay, well, there's just the daily chart of the rand dollar going back to around February 2023. We can see it's sort of like this rounding shape. And this screenshot was taken at about lunchtime yesterday, trading at around 1740. I think today we hit 1746 or 1749. But there's two very interesting levels to look at, in my opinion. So if we just look at that red line, the 50-day moving average, we can tell that the pair has been trading either side of it for a very long time. It's either above or below, but never quite broke below it, which it did do since the elections. The rand has showed some amazing strength and sort of found support around that 1710. In fact, it turned at 1709, but I put support at around 17 Rand 15. But that pair is starting to get a little bit overbought now in terms, if you look at it in terms of the dollar. I wouldn't be surprised if the rand did manage to test that 50-day moving average before we get a continuation. But there's still no signal that we're going to see any further sort of dollar strength going into the end of the year. It does look like the momentum is certainly in favor of the rand. So if we zoom out to the weekly chart, now this goes back much longer. This goes back to around 2022, and there's a very significant support level, which I peg at around 1675.
Okay.
Now, I really wouldn't be surprised if we hit that level before Christmas, because odds are on that the US is going to cut again. As long as they do it methodically and slowly and not jump the gun and get the markets to panic. I think it's not unrealistic to expect the rand to test that 1675 to the dollar, and then I think it would be the absolute perfect time for clients to start considering maybe taking some money offshore. Normally we see in a panic market, when we hit 18 and 19 to the dollar, everyone wants to go offshore, and it's probably too late. So it's just a very interesting level to keep your eye on. Like I said, I wouldn't be surprised if we did touch 1780, but I think by the end of the year, definitely 1675 would be a level I'd be looking out for to go the other way, and then maybe looking at buying some dollars.
The optimism on the rand is actually quite interesting because, I mean, since we saw the non-farm payrolls coming out on Friday, where they surprised to the upside, there was kind of this sentiment from the market that actually, because the labor market is still quite strong and even unemployment actually decreased slightly, that people were thinking, well, you know what, the Fed doesn't need to panic and go for a 50 basis point hike. They can just do a 25 basis point hike, which got the market to kind of, their mood soured a little bit because they were like, oh, now we can't even expect a 50 basis point hike. So are you saying that even though there may be some disappointment that there might not be a 50 basis point hike, as long as there are still cuts, the support is still going to the rand?
Look, I think it's the opposite. I think the market in the US would have panicked if they cut by 50 basis points, because it would have installed this sort of fear that maybe the US is heading a recession.
That something's broken already.
And they're trying to rush things. So the fact that they did only cut by 25 basis points leaves room for more as we go forward in the by the next meeting.
Yes.
And I don't expect them to do anything drastic, because if they do, I think everybody fears this hard landing in the US. So jobs are robust, unemployment is good, but there is still that niggling recession fear. And if they cut rates a lot more methodically, I think the market stabilizes and the panic stays away, and that's what we want.
Yeah, and we can also hope that the rally that we got out of the China stimulus will actually still carry on and still be baked into the rand. Well, let's get into some of the other counters that we are looking at today, and companies particularly. Italtile, that's been quite an interesting one. It's quite interesting because the numbers that they keep on coming out with still signal just the difficult environment that they are trading in. But you're getting some analysts saying that, you know what, actually, because of the kind of turnaround in the macroeconomy, the cuts in the interest rates, the GNU promise of a brighter economy, then maybe it might be time to get into Italtile. But I know you can't really time these things perfectly. What are you seeing there on your side?
Look, this is the chart on Italtile going back to 2021, and as you can see, it's been on a hiding to nothing. But there's many reasons why this chart has caught my attention. A strengthening rand for one. Italtile, I think, is a majority importer.
Yes.
So that suits them. All the smart money has already moved into the property stocks, you know, expecting interest rates to keep coming down for an extended period of time. But if we just go back on the weekly chart, you can see just how long and hard it's been for Italtile investors. But now, recently, we've seen it break out of that downtrend. And I think if it's possibly too late now, you're waiting for a little bit more value in the property stocks if you missed out, I think this is the third tier of that sort of optimism that's coming through. And Italtile, to me, has broken this downtrend. It is a little bit overbought at the moment, but I think this is more a medium to longer term play. I think a patient investor will be rewarded, and especially the guys that have been holding it down that slide will start feeling some relief. So if we just look at, if we zoom out even further and we take the monthly chart all the way back down to 2015, it's been a bumpy ride for them. But if we just look at where the next sort of resistance level is, it's not too late to buy Italtile, regardless of the recent rally over the last couple of months. I think you should be aiming for between 15 Rand and 15.30 on the stock. It has bounced, I know, from around 9 Rand 50 or 9 Rand 90. But if you look at yesterday's closing price at around 12 Rand 80, there's still 17 to 20% to be made. If you just hang in there and you're buying value and you are taking a chance here on this opportunity if you have missed out on the property stocks. Because let's face it, the more relief the consumer gets now from interest rate cuts, they're going to pay less on their houses, cars and credit cards. Maybe it's time to do some more home renovations soon. And then, you know, that will reflect in their numbers.
You're saying that it might not be too late, but is it also not maybe too early to get into that stock because the numbers are still reflecting the tough economy? Or is it maybe just the right time so that you can manage to get that upside when the numbers actually start filtering through?
Look, I think the only obstacle in the way now for Italtile is probably the Christmas or the December break.
Yes.
But the price has been going up for a reason. And there is optimism, and you probably don't want to miss the boat. So I'd rather be in a little bit too early. I don't expect much downside from here.
Okay.
The risk is to the upside.
Okay.
So I'd be very happy to pick this stock up at current levels and just sit on my hands for the next sort of 6 months, and let's see what comes through from the MPC. Let the interest rates come back to the consumer, and let the consumer start spending on their own. And I think it'll stand them in good stead. And maybe if you bite the cherry now, you might be rewarded a little bit later.
And there's also two-pot people biting into their retirement savings. So maybe something that will also...
Hopefully not too many.
Yeah, something that will also might benefit the stock there. Well, let's get into Afrimat. I was actually reading an article earlier on by an analyst who covers the stock a lot, Anthony Clark, and he was talking about the kind of sweet and sour that Afrimat has. That, I mean, internally they're known to be this, good management team, good asset allocators, good capital allocators, but then obviously they have the macroeconomic environment headwinds that they're kind of dealing with now. What are you seeing there on a technical perspective? Yeah,
well, look, Anthony, he covers the stock extremely well. This is purely from a technical perspective, and the principle behind the Afrimat trade is very much the same as Italtile.
Okay.
So Afrimat's obviously suppliers of cement and building products. Also been under the cosh for a little while, but the trend has still been up for a very, very long time. I mean, you'd still be happy if you bought this in November 2023. But there's very, very interesting price action that's happening on Afrimat. So yes, we had the sell-off from July. But if we just look at what has happened on Afrimat, the 200-day moving average has been quite a significant support for that stock, and that's where you've tended to see the buying. Now, interestingly for me, we've had this pullback and it stopped exactly there, but coincidentally, it's stuck on the trend, and that trend coincides exactly with that 200-day moving average. So while a little pullback could be expected, and I don't think it will be big for Afrimat, probably another 2 or 3 rand, it really, really gives you an opportunity to buy into the optimism again of the future, exactly the same principle as Italtile. We do expect interest rates to start pulling back and giving some relief to customers, and also home improvements should be picking up.
Yes. And
this is the basis of this trade. A little bit overbought at the moment, but if we just look at the bigger picture on this stock, it's trading at around 67 Rand. If it does happen to come down and test that major trend line support, and you take a nibble on that, and this is also, you're looking out to about 3 to 4 months. Let's get through December maybe.
Yes.
The very next resistance zone puts you up at around 75 Rand. And I think that would be fair for Afrimat. If you look at the rest of the market, it's been a laggard. Our resource stocks have had a massive comeback over the last sort of 2 weeks, pulling back now. Retailers, banks, all of those guys have had their run, but it's sort of the building industry that hasn't.
Yes.
And I do think it's time to look for some value now that everything else has run. And this gives a very good opportunity to scoop yourself a 10 Rand on a 65 Rand stock. I'd take that any day of the week.
It's quite interesting that you say that you pointed out that it hasn't actually participated in the most recent rally that we saw in the resource. Of course, we know the influence that the commodity space does have on Afrimat. Would you say that at this point, if an investor does go in and any kind of pullback on the stock would just be a temporary movement where you just have to kind of stomach that and kind of wait for the bigger upside that's to come?
Look, I think the picture is much bigger.
Yeah.
Once the GNU is decided on and there's a bit of stability, one should expect as the economy gets stronger, there's going to be a lot more infrastructure spending. And nobody has looked that far. There's still that doubt. But I think if you're ever going to buy into the future, these are the kinds of stocks you need to be looking at. Your retailers and your banks are always going to be there, and they are cyclical.
Yeah.
Afrimat definitely cyclical, but you've got to expect the cycle to improve at some point. And I've got no doubt that once we start seeing some infrastructure spending, more contracts being dished out, never mind the sort of homeowner spend or domestic spend, I think there's a lot more scope for these kinds of stocks looking ahead into the new year.
All right. Well, let's go into the educational segment. You're talking to us about tweezer candlesticks. I thought that I could only use tweezers on my eyebrows.
Well, you can, but you can also use them to tell when a trend might be changing. So, yeah, I've chosen to talk about tweezer tops and tweezer bottoms. It's more for the novice trader.
Okay.
I know we rely a lot on technicals, and this is a very, very nice way of trying to predict when a trend is about to change. And it's very simple. They do tend to signal short-term trend reversal, so this is not long. If you're stuck in a longer-term portfolio, don't panic.
Yeah, okay.
When the market turns against you, or no longer term, you've got to ignore the noise. But essentially, this involves two candlesticks, but they look almost identical.
Okay.
The color of the candle does not matter.
Okay.
So essentially, it's a similar back-to-back highs at the top of a trend will signal probably a short-term change, which will give you the idea. You can either go short or you can sell your long position if you're a short-term trader. And vice versa. At the bottom of a downtrend, the candles make exactly the same or very similar lows. And close at more or less the same place. So they're similar back-to-back lows at the bottom and similar back-to-back highs at the top. So when you see two candles that look almost the same on either side of the trend, we call those a tweezer. So it takes you 2 days to spot them. But on day 3, you probably have a confirmation that the trend has changed. And you could probably follow that trend by either exiting or following the trend reversal. And these are normally very accurate signals. They don't tend to last very long because they are short-term trends, but they do tend to be profitable for short-term traders.
All right, just a demonstration to our viewers. We're looking at this and that. Thank you so much for your time and for your insights on the technical analysis today on the dollar rand, Italtile and Afrimat, and obviously for taking us through the educational term tweezer candlesticks here and here. That was Pietropaolo from Unum Capital.